I want to shift gears over to your call on the U.S. Your prediction is that the U.S. stock market is going to crash, that a recession is coming, that the bull market right now is being artificially supported. What factors are you looking at right now to make that determination?
So actually, so first of all, I want to point out that it's according to my observation and according to my models, it's a common practice among the U.S. companies to manipulate the accounting rules to maximize their profit in the current 2 years to take advantage of the low tax rate in fear that the next government may hike the tax rate back. So I mean, the EPS had been in the recent 2 years had been caught surprised the market on the upside, but there is a reason. Okay, because the business owners want to take advantage of the low tax rate. That is the reason one why I'm pessimistic about the outlook of the U.S. stock market. And the reason two is that the stock market is still far too optimistic. There's a contradiction in the market. On one hand, in the equities market, the people are forecasting a 10%, at least 10% EPS growth for next year. On the other hand, in the bond market, it's pricing in a recession in the next year. So if you ask me to make a choice, who will I believe in? I think I will follow the bond market, which is much more sophisticated than the stock market. So I think in the end, the stock market will wake up to the reality. It's way too optimistic to forecast a 10% growth.
We were just talking about the currency fluctuations, and now we're seeing the onshore yuan per dollar blow past that psychological 7 level. Does that change your calculus at all about what we were talking earlier? How is the Chinese government trying to balance the juicing growth with the weaker exchange versus maintaining that stability and not encouraging capital outflow?
Yeah, I think this is just the current market is very in a panic mode. But in the long run, I think, as I said, I think the U.S. market is very close, if not yet, it's very close to the beginning of the recession, and then I'm calling a peak of the U.S. dollar's valuation against the other currencies. So don't forget that the China yuan is kind of pegged to the U.S. dollar. So when the U.S. dollar depreciates against the other currencies, China yuan will follow the suit. Just depreciate along with the US dollar. So actually the depreciation pressure will be alleviated a lot.